Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host for the day, and that's Nathan Peterson. But let's bring in our next guest for our cash tag segment. That's going to be Andy Swan, the co-founder of LikeFolio. Welcome to the show, Andy.
Thank you.
All right, so we're talking YETI. They reported earnings earlier this month. Pretty good report. The stock's still down about 50% this year, but it seems like they're navigating maybe some of the inflationary pressures because their margins continue to grow. What kind of data are you seeing out of LikeFolio? Is it still positive? I mean, it seems like anybody that has a YETI likes it.
Yeah, everybody that has a YETI likes a YETI. I will say one of the things that we're starting to see here at I'm getting some crazy feedback on sound. I'll have to get back with you guys in a second.
Oh, okay, no worries, no worries. So I'll go to you, Nathan, real quick on YETI. We'll do a little analysis on this. They beat on the top and bottom line last quarter. On EPS, they beat 63 versus 58 cents. And revenue was $433 million versus $414 expected. When you look at a company like this, that's such a specialty type of retailer on this, do you feel like this is capped in any way, or do you think they can continue to expand their product offering?
Well, they are expanding their product offering. I mean, they've got luggage, Tom, out there. So, they're not just a cooler company anymore. But, I think based on what the stock has been doing, if you look, it's still in that downtrend. 200-day SMA is still sloping downward. I think a lot of the concern that the market has is, hey, we've got, great products and nice to see them expand their product offering, nice to see them beat on Q3. But if we are going to be moving more into a recessionary environment, is the consumer going to begin to pull back? I mean, Tom, you mentioned RH and the like, and some of those higher end retailers that had noted the changes in consumer behavior. And there is competing products that is out there. You can get some generic equivalents to what YETI provides. So I think the question that the market has based on what the stock's been doing is, hey, if we move into a recession, then our consumer is going to be either stalling on some of those purchases or trading down to perhaps some of those generic brands.
Yeah, that's what I always think about when you have these high-priced items. Let's bring in back in Andy Swan to help us break down some of this data on it. So, Andy, I mentioned before, if you have a YETI, you kind of like it. They're expensive. They're an exclusive type brand, a lot higher price points than some of their competitors. But it seems like data still positive on this one.
Yeah, still positive. People, they do love their YETIs, and I would say that the YETI, tumbler has typically been kind of the introductory product, kind of that first taste free, and then you get into the coolers and the more expensive stuff. But the YETI tumbler has typically been the way they introduce themselves to the consumer, and people tend to love those. What we're seeing at LikeFolio, though, for the first time in the history of tracking our data, is that YETI on the tumbler side actually has a real competitor in Stanley Outdoor. So Stanley makes this tumbler. It's actually an outdoor company that was revitalized by a few women that ran a blog in New York, and they love this Stanley tumbler because it's basically a YETI with a handle on it that still fits in the cup holder and still keeps drinks hot or cold. And the resurgence of this Stanley tumbler, which like I said, was originally developed for outdoorsmen, but the suburban mom has really taken a hold of this, and it provides this competitive kind of counterbalance to YETI that we haven't seen before. And I think when I see the stock up on a good earnings report, and I agree, YETI looks good from an execution standpoint, but this new competitive landscape, I think, is a shift for YETI, and we're going to see as we get into this holiday shopping season whether that impacts demand for YETI products. I think it probably will, and a lot of times this holiday, Black Friday to Cyber Monday, is a tipping point for YETI, positive or negative, and so I'm a little worried that the stock's gotten ahead of itself here, kind of sounding that all clear when there is another shark in the water.
Hey, Andy, this is Nathan. Thanks for joining us today. So I'm curious in terms of on the data that you look at, how many consumers are repeat buyers? And what I mean by that is if those that are going out there and purchasing a cooler, for example, are they also adopting, the luggage or some of the apparel, or are they moving out and into what else, the other offerings that YETI has there? Or is it one of those things where once you have a cooler, because it's so high quality, that you're likely not going to be going back there because the thing lasts so long?
Yeah, what we see is that typically the tumbler is the initial introductory product that people buy, and then they like that so much they'll go out to the cooler. Next thing you know, they might have a YETI sticker on the back of their truck. I mean, that's when you start to get into the real hardcore users. So I'd say that the tumbler being kind of the introductory product, and then expanding out from there into coolers, even apparel from there, it is a concern for us because, like I said, with this Stanley tumbler coming on so strong, that at least dissipates that initial consumer touch point that YETI typically has with people to try to get them into their more expensive, higher margin products.
I like that that little analogy there, Andy. You hook them with something small, and then you get them to buy those high-priced coolers that have the higher margins. But I noticed on one of your charts, the direct-to-consumer checks, the global web visits, starting to tick down here a little bit. Now, I'm guessing this is seasonality because you see the two peaks there on Black Fridays and Cyber Mondays over the past couple of years. Do you expect that again? Because, I mean, I literally just bought a couple YETIs, and I got them personalized for Christmas gifts. So are we expected to see, that jump up here into the holiday shopping season?
Yeah, I think we'll see another spike Black Friday to Cyber Monday. The question is, will we see the spike that we've seen historically or not? And if that falls short, that Black Friday to Cyber Monday, global web visits to YETI, that direct-to-consumer piece, then that will tell us that the stock may be significantly ahead of itself in its all-clear signal, and that we may want to look back. If they have an unbelievably good Black Friday to Cyber Monday cycle, then that will tell us that the market has got this one right, and we could be on the turnaround track.
Yeah, and as I mentioned, the stock's still down 50% on the year, so it's taken quite a bit of a hit, even despite that great earnings report. Andy, I know you guys don't have an earnings score because we just had earnings a couple weeks ago, but what would you guys be here if we did have an event?
Yeah, I think that, I would think that the risk on this stock is still to the downside, especially after the most recent move and the introduction of a very competent competitor kind of coming out of nowhere.
Yeah, it seems like these competitors catch up relatively quickly when you've got a high-priced stock or high-priced product as they try to fill that niche also. All right, great stuff as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, the co-founder of LikeFolio, breaking down the data here on YETI after